Good morning, everyone. It is Wednesday, the 2nd of September, 10:30 a.m., and I'm looking at Euro GBP. So on the daily, if I just take you through this, and I do it sort of manually, one by one, starting off with the daily, there is a downtrend. It's not ridiculously overextended from the moving averages, so I'm happy with that. If I go down to the 4-hourly, it's definitely not overextended, and I quite like to look at that. We've broken this purple line here, representing the previous week's low. Then go down to say 2 hours just to get a look at that. I've added in a level of support and resistance, which makes a lot more sense if I go down to say 30 minutes. Kind of have a look at that. So what I'm looking for here is a break and a retest of this level. If I go down to the 15-minute time frame, that's what I'm looking for. It's a fib as well. It's a really nice little bit of a fib overlay there, close to 8,900. But anyway, or 88.90, and so a break and a retest of resistance here would be great as a potential setup. So what I may consider doing is putting a sell order in here with my stop loss behind the previous high here, and just have price trigger me in as it hits that level and potentially turns around. It's a nice little fib sweet spot. It's a level of previous tested support and resistance in a prevailing downtrend. So failing that, if I get a nice little bearish candle in that area, I'll also look to short that. So I'm going to pause the video and update it again when the outcome a further bit down the road. Good morning, everyone. So good morning. It is now 5 to 10 a.m. on Thursday morning. So this is now 24 hours later, 3rd of September, and I'm just carrying on from having a look at this. So yesterday, I wanted to recap, which you've probably just seen, obviously, in the first half of this video, looking to go short, looking for an entry. And basically, if I go through down to the 15-minute, which was my entry time frame of choice, price ultimately had broken through, and I was looking for price to come back and connect with this level of support and find resistance at that point. So what ultimately happened was, this was the candle on which we were at, and price basically just started to head down from that point onwards. But then what it did was it ultimately came back, tapped me in at my entry was just below this level at 88.94, just below that level, with my stop loss up behind the previous high, and I actually stuck it up just above the low of the previous week, just psychologically, just kind of that being candle differences. Anyway, so price came up, headed lower, didn't trigger me in. So didn't trigger here, came back up here, triggered, went past that point. Came within the hairs of my chinny chin of stopping me out. So right within, actually didn't break the high of the previous high. So stop loss behind that, absolutely fine. And then headed down. So far at this point, here's my issue with how this trade should have played out. And really, really good trade. First of all, in this kind of breakout trade, I wouldn't have had these spikes through that level. It's not ideal. And a little dip below that. So, okay, there's an area here, and it's not precise, but it tells me that the support resistance or the buyers or the orders at that level are not super, super strong. So that's the first minor issue. It's a criticism of it on the trade. The pullback and the continue down, not a problem. That's actually pretty common, pretty normal. But here's where I get a little concerned. The second move up didn't trigger me into the trade. Now, I was busy with other stuff. I didn't actually come back to the charts at this time. When I came back to it, it was actually already down here somewhere. So I think I saw it heading back up, and I was like, okay, fine. And then I went away. But it didn't come back to that level, which I think would have been a very natural pullback. So no, this first time round, it continued down. I'll let that go. Second time round, it headed off without coming back. So there's obviously some local resistance here, but that's not really what I think how the play. So we have an idea of how we think the trade is going to play out as it goes, and that is already a deviation. So that in itself is not. It should have come back up to test this level. If it's going to come back and test the level, then stop messing around. Come back and test the level. Then it comes back, and it just goes right through that level. No resistance whatsoever. It just goes right through. That is a second deviation from what I think should have happened when price hit that level. Price then went on and encountered resistance at a later stage. So if we look at it from a Fibonacci retracement thing, it's perfectly acceptable. Fibonacci retracements can go back to 50, to 618, to 786. They can go all the way back, not a problem. But I think we can all agree, especially Fibonacci users, that when we go back almost 100% on a Fibonacci retracement, the trend and the trade is probably not going to play out the way we think it is. So the fact that it went back that far to test the next level of resistance is a third warning on price. That's why I put my stop loss behind that. First of all, because it's behind the previous high, but also because it's behind the 100% retracement, because the market shouldn't go back to the 100% retracement. I've got puppies by my feet and they're busy eating their bed, which they're not supposed to do. Then price continues down, hits the 1-to-1. So I'm triggered in, I hit my 1-to-1, my trade is now break even. And at that point, you think, okay, it's now resuming the trend, it's done a consolidation on a higher time frame, it should head down. So it goes down, literally taps in terms of price. I've seen that it's actually tapped my 2-to-1 take profit, but the order didn't get filled. So in other words, I have not hit my 2-to-1 take profit on this, but because I did hit a lower swing high, I did actually trail my stop loss behind that, especially when I saw price break lower here. So my stop loss was here. Price then came back up earlier this morning. To be fair, yeah, I was actually at my desk and stopped me out. So the profit I've made on this trade is just under 1% on that, because I took off half my percent profit, then updated my stop when I got here, and I banked. I lost that little bit there. So it's just under that 1%. And then prices come all the way back up. So the overarching problem here is that this trade is not unfolding the way that it should. Based on the overall price action, this trade should be carrying on down. So if I look at the daily, it all looks fine. If I look at it on the 4 hours, it looks okay. And it's forming a bearish rejection candle now. I'm still in the trade. Okay, I'm sorry, I'm not in the trade anymore. I'm not in the trade anymore. I got stopped out. What I'm saying is that if I was still in the trade, this might be forming a bearish rejection candle off that previous level of resistance. So on a higher time frame, it looks like it's now getting ready to carry on. And actually that looks great. But the way that it unfolded on the lower time frames was not ideal. This is not a good trade in my mind. This gets a 6 or a 7 out of 10. This is not a great trade. And I can argue that, sure, I didn't lose money on it. I actually made money on it, but it really didn't unfold the way that I think that it should have. So we do get random, we get things that happen. But all of this, there's just a lot of stuff about it that doesn't make sense. Even as it's playing out, there was a lot of stuff that didn't really make sense about it. So I wanted to give you that feedback as a master trader, how I can criticize my own trades and go, kind of like, that was good, that wasn't good. This is what I've learned from reviewing the trade, and this is what I want you to take away from it as well. All right, so have a good day. Thank you very much, and I'll see if there's anything happening in the markets today.